Good afternoon, good morning, good evening, depending where you guys are at. This is Currency Watch. We're having one on Wednesday just because finally it looks like we might get some action in the Great Britain JPY, or not even the Great Britain Oz, but we could break the range. And we have been basically trending along so far this month, not having opportunities to jump into many trades in the Euro, Swiss franc, and the Great Britain. But I think we're about to break out of these consolidation ranges, and this should offer us quite a few opportunities. Let's take a look at the Aussie USD. You can see we all know that yesterday I went short at 90.30, looking for a push back down lower, and there was two indicators that I was following here. We had this ascending trend line, and more importantly, not more importantly, but coinciding with, I was looking at the harmonic setup that I've been talking about forever in the Aussie USD. That we had a butterfly pattern that had emerged, and it actually triggered right around this level at 89.63, but I didn't want to risk that much. I was looking for the very top of the range at the 90.20, 90.60 level, and I had my stop here at 90.65, probably a little bit too tight. As you can see, the pair went up and touched 90.66 last night. Closed the trade out, and since then we are right about back where we entered. I believe I won it at 0.9029, and now not much we can do right there. That trade has voided itself out, but if we get a break of this 90 level, we could see a renew move to the downside. And as you guys know, let's go back to the main chart. As you guys know, I do favor a continued push lower in this pair, but that is going to be null and void as long as the pair is above this trend line. But to make me jump into the top side, I would like to see a break of this higher. I'd like to see a break of this high, so we would have a higher high above the 90.30 level, and that would basically put an end to this downward momentum in the pair. But if we do get a pushback down lower, as I've all said, the target I would believe would be from the 50 fib bounce that we had right here at 97, the 0.272 extension, which is around 84, let's say 83.80. So that's what we'll be watching for in that cross. The rest of the majors, though, let's take a look. I thought we were going to get a stacker chance to jump into a stacker trade in the Euro USD. It came down, bounced at this trend line. That was about as bearish as it gets. That candle, that 4 candle was funny. Last night I had some friends over for dinner, and inevitably the conversation will always come around to currency trading at one point or the other. And nobody really knows what that is unless they're in the financial markets themselves. And I was showing them that trade, and we did a demo account. I did a fictitious trade for them, and it turned out pretty well. Didn't do the trade myself though. And what I was looking at there is, even though I moved that trend line, it was, I believe, what was it last night? It would have been this candle here bouncing back below the trend line, and then looked like a nice move lower. But of course, this all coincided with news, but you can never predict news. There's just, sometimes you just need to play through things. Anyway, so you can see that this pair is still in its consolidation zone. Things are looking, we're not getting a range of any sort at the current moment. And you can see that the pair is just pushing up, down, up, down. We're going to need a break of this range. If you want to, we can go short here. I was considering stacking into this trade, but you can see the entire length of the candle is what, 136.50. That's almost 100 pips. Could go in on a 50 fib pullback, but I'm not 100% sure because this is still in the consolidation range that I've been waiting for a break of between 137.40 and 134.75, and we still have that ascending trend line. This is the multi-year going back to 2008, right around the 139 level. So the ultimate trade would be see a pushback up to this trend line and try to go short of that. But anyways, for a stacker trade, still interested in the break of one of these two ranges. Could play this. Still, we'd have to see how the daily candle closes at 5 o'clock Eastern time. The Great Britain pound. This has helped the Great Britain JPY and Great Britain Oz. We had a nice push higher today with, I guess, the inflation data, and the cross is up quite a bit. Nice play off the bottom of the range, and now it's pushing back up towards the top between the 166, 166.50 level, and you can see for the last 2.5 months the pair has just sat in this range, not doing very much. And then before that, the pair sat for about 2.5 months in another range. It has really, really slowed down as of late. And I would imagine that a trend will develop at one point or the other. We did have a similar price action 3 or 4 years ago to start the year off, we sat in ranges until about April, and then everything broke out. But of course the ranges were a little bit larger than this. Anyway, so what we see here is right now, right here, we can see that the pair is back up to the top of the range. I would expect a bit of a pullback if it was going to continue even back up to the top at this point, and that leads to my thought on the Great Britain Oz, Great Britain JPY. We'll get to in a second. We'll take a look at New Zealand. Trendline break, still range between 84, 80.50 above this trend line, and as we said, when it broke, as long as it stays above this level at 82, it favors a push higher, and that is exactly what it has been doing. And you can see this channel right here. If this baby closes like this, that's a pretty bearish candle. It's about as bearish as you can get, and it could indicate we're going to get a switch around to the downside in this cross, as we've had in the Aussie. And I should have stressed, as long as it's above this 90 level, it still favors a push higher in this cross. But I'm not going to be concerned until we get a break of the 90.30. Concerned isn't the right word. Interested until we get a break of 90.30. Yen in the range between 103.50, 103, 101.60, 101. Need a break of that. Right here, right now, you can play it, but it's chop, and it's fun to play in the waves, but it's not a great way to make money. It's a good way to lose money. Costs money to go to the beach. Think of it that way. All right, so let's look at the Great Britain odds. This pair has been interesting so far this year. We had it had the great back test month last year, and I'm putting this on the blog. I was doing it this morning, and for some reason it looks like the servers are down, but I'll have this up sometime today. And what basically, it's already on. I just made it easier to read. I just put all the charts, broke them down with the trades on the charts going back to last June, I believe. And you can see all the trades and the entry and exit points and so forth like that. So we all know the story from last week. We had the break of the range right here. We were looking for a 50 fib pullback. We missed it by like 20-30 pips, and then the pair went down, let's just say 168, all the way down to 162. That was a 500 pip move that we just missed, but that's how it works in this cross. Now we can see that the pair is in this range. We are looking for a break of this range of 84 basically and 81.20, and it looks like we're pushing up to the top here once again. When we get that, we'll jump back into this pair. The momentum obviously is to the downside, because if we look on the daily chart, the pair, what did it break? This long-term moving higher average. It's hard to see on this ascending trend line that had capped the price action over the short-term time period. So any move higher could find an opportunity to go short. I would be interested to see if we do get another up to the top of this range, maybe even up here. If we get another candle similar to this, that could be a great opportunity to go short in that pair. The Great Britain JPY. Now this is the pair that's of interest right now. You can see we've been obviously this pair we just started looking at. We have gone ahead, and last month it didn't do much, but it had great months earlier in the year. This is all available on the blog. And then last month the same thing. Last week we had the push higher, but no, we didn't get the 50 fib pullback. But starting into this week, where we're actually looking for setups, you can see that the pair has basically been range bound, not giving us opportunities. Nice move there, but the problem is when I have the wicks, this wick becomes a new resistance level, and right now it's 169.52, 169.90. So if we stay up and close on the 4-hour around this point, we'll definitely put an entry in to go into this pair. But what I would do is, let's see, the low is 169.18. I would just expect it to push back maybe to this 169.50 level, and that's probably where I'd put my entry, just because I believe the pound will retrace. It's not going to go up, especially into the end of closing here, and give us a chance to enter that trade and limit the risk reward, or give me a chance to enter the trade and limit the risk reward. You guys can follow if you want. And then we'd look for a continued push higher in this cross, but we'll have to wait for the close at 1 o'clock to really confirm what the plan is on that pair. Other than that, that's it. Figured give you a currency watch. Slow trading day. give you an opportunity to take a look. Actually, not a slow trading day. We've had quite a few interesting things with the testimony out with Yellen. It might actually get institutional traders back into the mix because they have been sidelined with the uncertainty. And then we had the news that the OMTs will not be placed out of consideration in the Eurozone, and then the strong inflation report in the Great Britain. I would expect that the Great Britain Euro is actually doing pretty well today. All right, that's it, guys. I'll post this on the blog in a few. Have a good one.